NVIDIA is the king of AI, but this crypto project can grow 10 times faster. At just 68 cents, Fetch.ai aims to do for blockchain what NVIDIA did for hardware. I'll share the tech, the partnerships, and the market potential that could make Fetch.ai your ticket to riches. Fetch.ai is a decentralized platform combining blockchain and AI. Its core idea is to create autonomous AI agents, programs that make decisions and interact on behalf of its users. These agents can collaborate, transact, and even monetize your work. At the heart of the project is ASI-1, a decentralized large language model designed for autonomous actions. This model allows agents to optimize processes in industries like energy, logistics, and finance without constant human input. Launched in 2019, Fetch.ai is permissionless, letting anyone deploy agents on its blockchain. Coinbase describes the network as enabling data sharing and AI access through decentralized machine learning. It also introduces digital twins, which is AI-powered representations of real-world objects, which can be applied in DeFi, transport, and energy systems. In short, Fetch.ai is giving AI agents a decentralized home where they can work together. Kind of like Tinder for robots, except the goal is to make you money, not ghost you the next day. The ecosystem runs on FET tokens, used to create, train, and operate agents, pay transaction fees, and stake. In practice, companies might use FET to automate supply chains or smart energy grids, while node operators earn rewards for maintaining the system. Fetch.ai provides AI agents a decentralized home, with FET aligning incentives across the network. FET has a fixed supply of 2.71 billion tokens, with about 87% already in circulation. At roughly 68 cents, that puts circulating market cap near $1.6 to $1.7 billion, and a fully diluted value closer to $1.8 billion. In crypto terms, this is mid-cap territory. Large enough for decent liquidity, but still small enough that new demand can still move the price. The flip side is higher volatility, but the same elasticity is what creates room for outsized multiples, compared with mega caps such as NVIDIA. Its price history underscores that elasticity. FET ran to about $3.45 at the AI peak in March of 2024. Then it retraced to roughly 45 cents by mid-2025 before it stabilized. That drawdown reflected rotation and risk-off conditions rather than a change in the project's thesis. And it leaves a wide gap between current price and prior highs. If the market re-rates AI agents as a core Web3 primitive, there's headroom back to all-time highs and beyond. If sentiment sours again, FET will likely magnify the move. Utility is central to the token's economics. FET is the medium for creating, trading, and operating autonomous agents, paying network fees, and participating in staking or governance. Those activities can act as demand sinks, especially if usage scales. More agents and more transactions translate into more FET in active circulation and potentially more FET bonded for security. Developer incentives, hackathons, and partner integrations can also deepen usage, which matters because sustainable value accrues when tokens are used, not just traded. Supply dynamics are another lever. With more supply already circulating, the risk of heavy unlock overhangs is lower than for early stage tokens, though ongoing emissions and treasury spending still matter. On the other side of the ledger, corporate treasury accumulation and the foundation's buyback program reduce free float at the margin. If long-term holders remove material supply while real activity grows, the float tightens and smaller waves of demand can have an outsized price impact. Liquidity and access shape how quickly new demand can enter. As a top AI crypto, FET benefits from broad exchange coverage and derivatives markets, which helps discovery and hedging. That access cuts both ways. Liquidity enables larger inflows in bull phases, but also faster repricing when risk appetite fades. For long-only investors, the practical takeaway is to expect shorter swings than equities and to size positions accordingly. The market opportunity is ultimately what supports a re-rating. if autonomous agents gain traction in areas like data marketplaces, DeFi execution, logistics, and energy optimization, Fetch.ai could capture a slice of AI-driven transaction flow that today sits with centralized platforms. Even conservative adoption, tens of thousands of active agents performing paid tasks, would translate into recurring on-chain activity and steady token demand. Tailwinds for AI and a consolidating crypto cycle, and you have a path where FET's percentage upside can outpace major AI equities. The risks are clear: the competition, execution, and macro cycles, but the asymmetric setup is why investors watch this name. Now that you have a quick intro into Fetch.ai, stick with me, because later in this video, I'll show you how it stacks up against NVIDIA. You'll see why this small AI coin could potentially move much faster than one of the biggest companies in the world. The past few months have been busy. Alongside the TRNR deal, ATW Partners and the DWF Labs committed $55 million to FET. Fetch.ai's role in the ASI Alliance expanded with a developer competition at ETH Global, incentivizing new AI agent applications. AI crypto rallied in August 2025, with the niche market cap hitting $34 billion and FET rising alongside peers like Render and BitSensor. Google searches for AI agents are up over 300% this year, highlighting public interest. Technically, Fetch.ai rolled out its ASI-1 mini model and is rumored to be preparing further upgrades. The team also launched Agent First, combining LLMs with agent technology to make development easier. Earlier partnerships with brands like Mansory and Solidus AI Tech, which is in the cloud AI marketplace, show the breadth of Fetch.ai's potential applications. Overall, these developments suggest Fetch.ai is aggressively expanding, laying the foundation for possible exponential growth, though access isn't guaranteed. NVIDIA's stock has been a phenomenal success story. As mentioned, the company's market cap roughly quadrupled in about a year during the AI boom, an almost unheard of feat at such scale. By July 2025, NVIDIA was worth more than the entire UK stock market, with its dominance in AI chips solidifying its place as one of the world's most valued companies. However, from a pure investment return perspective, the days of NVIDIA delivering another 10x in short order are likely over. A $4 trillion company doubling or more would require trillions in new value creation. Even NVIDIA's CEO would probably concede that such exponential growth can't continue indefinitely. Fetch.ai, on the other hand, is much smaller and more speculative, which means if it succeeds, the percentage upside could indeed be far greater. To illustrate, at roughly $1.7 billion market cap today, a 10x increase would put Fetch.ai at about $17 billion. While an enormous jump, it's not inconceivable in crypto terms for a leading project in a hot sector. For context, $17 billion would be smaller than the market cap of top smart contract platforms in past bull markets, and roughly on par with mid-sized public companies. The allure for investors is that Fetch.ai could capture unique niches, such as decentralized AI services, and grow into a multi-billion-dollar platform delivering venture capital like returns to early token holders. In full transparency, I recently moved some of my crypto profits into NVIDIA. Right now, I don't own any Fetch.ai, and the reason is simple. My portfolio is already heavily weighted towards crypto. To balance things out, I shifted some of that into stocks. But if I wasn't so lopsided in crypto, I'd definitely be buying more Fetch.ai than NVIDIA. That said, it's important to temper expectations with reality. Fetch.ai's valuation depends on both crypto market sentiment and real adoption of its technology. The crypto market can be fickle. We saw FET run up and crash around narratives before. But each cycle, if the project's fundamentals have improved, it often reaches higher highs. Some analysts are watching technical patterns on FET's chart. Since June of this year, the token has traded in a range roughly between 56 and 90 cents, forming a consolidation. A decisive breakout could signal the next major move. If bullish momentum returns to AI tokens and Fetch delivers concrete progress, traders could push FET above its summer highs. Some technical forecasts even suggest targets in the $1.25 to $4 range over the long term, if key support levels hold on the project's growth story plays. On the flip side, a breakdown below the current support in the mid 60 cents might indicate further weakness, with chartists eyeing lows around the 38 cents as a possible downside target. In short, volatility will likely persist. Fetch.ai can swing dramatically based on news and sentiment, much more so than a stable giant like NVIDIA. It's also worth noting that NVIDIA's success indirectly benefits Fetch.ai in a narrative sense. NVIDIA's continued dominance and revenue from AI hardware underscore that AI demand is real and booming, which in turn keeps the AI theme in the spotlight for investors across markets. When NVIDIA announced blowout earnings or new AI chip products, AI-related cryptos often see renewed interest, even if, as CoinDesk observed, the correlation isn't one-to-one. In last year's rally, for instance, FET and other AI tokens surged in unison with NVIDIA's hype. By early this year, the correlation weakened as crypto went into a lull. Going forward, if NVIDIA continues to post strong growth, albeit at a slower pace, it could keep sentiment positive for the entire AI sector, giving Fetch.ai a favorable wind. The key difference is that NVIDIA's growth is backed by tens of billions in yearly revenue from AI chip sales, whereas Fetch.ai's growth would be primarily driven by speculation and adoption of its platform. In a neutral, research-backed perspective, one might conclude that Fetch.ai offers a high-risk, high-reward complement to something like NVIDIA. NVIDIA might be the more stable play on AI, if any $4 trillion company can be called stable, whereas Fetch.ai is more of a venture bet on a cutting-edge concept, such as autonomous AI agents on blockchain. If their technology gains traction, say if a few flagship applications emerge where millions of users indirectly use their agents, perhaps without even knowing it, then FET's value can increase dramatically, potentially much faster in percentage terms than an established stock like NVIDIA. On the other hand, if the concept of decentralized AI agents proves too early or fails to find a market, FET could stagnate or fall while NVIDIA continues to prosper from selling picks and shovels to the AI gold rush. If you found this breakdown on Fetch.ai helpful, don't stop here. I've got another video on Hash.ai, another AI token with the potential to 10x faster than NVIDIA. Click over and watch it now so you don't miss out on the full picture.